Here we go, everyone. Good morning. It's a Monday morning, 6/13/2011 at 6:00 a.m. Pre-market futures. Here is the gap up today, and the markets are currently short-term oversold. Every big reversal gets a short-term oversold bounce. The most important thing for MMTs to understand in the school here now is it's a monthly options expiration week. And basically, the call side is deflated versus the put side is inflated now. And we've had 6 weeks of good selling. We've had some pretty big haircuts. The only problem that we have is that it is a monthly expiration. Nothing's going to make sense. There's going to be lots of volatility, other than we know that we're going into the expiration at a current oversold level. Just like when we were overbought 6 weeks ago and we were shorting the whole market, is that we were just too overbought. And we had stayed overbought for a period of time, made higher highs within the cycle. Now, on the invert side of it all is that markets put in lows and can stay oversold for a while, but you're going to have these little knife hook, short-term good bounces, good money to be made in these markets, because it is. And one of the things that we're going to be focusing on is what type of bounces are we going to put in. Just remember one thing, that part of the problem for the bulls or the bears is that we have not put in a classical bottom with a capitulation. And what does that mean? We haven't seen the fear indicators, the VIX and the VXN spike to all-time highs, or spike up really high, but then they stop there. When they stop there and reverse, that's when the lower end of the bottom of the broader market will put its bottom in when we get to that, but we're not there yet. And out of 20 trading days during the monthly expiration, which is every third Friday of the month, not the weeklies, but you can get a lot of things when you're short-term oversold. Some of these call options off the bottom make some pretty good money now. Okay? And relevancy is short-term oversold to popping these things out on trades, and we're going to talk more about it. So here's the gap up. There's some M&A activity. The futures are gapping up today. S&P is up 570. Fair value is plus 9.8 in the cycle. Nasdaq futures on their little gap today are 7.2 in fair value. And we've got crude oil at 98.74 a barrel. We got Brent crude at 119.91, up $1.13. We've got the FTSE, the CAC, and the DAC all have positive territory, slightly, because they too have been, in a bear reversal in worldwide exchanges. So we're going into the monthly expiration at a short-term oversold, but let us not forget, my MMTs, is that when we go up to resistance 1 in price or resistance 2, but in your application, that when you hit the high end of the IR and the bid and ask ratio simply doesn't want to go any higher, down you come. It's that simple. So if it goes up a half a delta, which is 0.50 ratio, and it stops there, it's time to sell short. Because if they're not going to be breaking higher highs in that, and they put in that final high, then that means that in the platform they're going to come down to a certain area. And what we're going to try to do is steal the bids today on a $500 call on Google, and we're looking at the 520 call that people have just been taken to the woodshed, and we're bidding that one out there. I've already given Brian playing that bid. And it's day 1 of 5. Day 1 of 5, and this is the gap open up, and the trade management will remain the same. On the gap open down, on the other hand, you can take a look here. There's 3 qualifiers: Gilead Sciences, that's a biotech, SLGN, but it's not real big either, and we've gone through lots of these mornings. So this is the Nasdaq comp. But then again, you got Deckers in here, you got your little culprit Netflix in here, you got your little Apple trade. Look at here, First Solar up $3.17 out of nowhere. That one is oversold, by the way. And it's come down pretty damn hard into where other markets have been, and we'll start looking at that one as well. So the trade management is to handle the intraday price volatility, to really work with the SMF market maker platform that you trade on, and that when things hit their cycle peaks, the trick is that when they hit those upper ends at tier level, so you got resistance 1, resistance 2, and resistance 3. If they go through resistance 1, we let it go up to 2. We get up to 2 and we start to fill. Not only are you coming out of your profits going long, but you're going short right away. You got to do that because they're not going to go higher now. They're going to roll over. Now, if the market is fairly strong on short cover interest, intraday interest, short cover, that's where people buy back to take profits like they do, but then when they get out of the way, you roll back over and you make another lower low. We've done it for 6 weeks. Dead cat bounces because we're not done. We can't say that there's a bottom in the market. Not yet, we can't. But we do know off of this video what we talked about and the characteristics of market bottoms, just like tops. And when those bottoms get put in, and how markets, you're going to learn that going into the quarterly earnings here in a couple weeks from now, 3 weeks from now, is you're going to learn that markets will try to price in earnings contraction, that corporate profits are going to be okay. They're just not going to be what they were. They're going to come down a little bit. And it doesn't mean that it's doom and gloom for the bull, but they got problems. Trade management is as follows. Short the tops. If the brain in the application stays, so if they go up to 90, 95 in that IR, but they come down and they hold, let's say 65, and they want to bounce and go higher, we'll be able to tell by taking a look at where the broader sector indices are across the board.